this time it really will be different. I mean, we hear that all the time in finance, and it never is.
Yeah.
But this time, really, it is different. Hi, I've got Dave Morgan on the line with me, and Dave was one of the inspirations for me to get into this business in the first place. So, Dave, how are you doing?
Mike, I'm doing quite well, and I'm going to have to digress right off the bat here because we've known each other for a long time. And I remember when we started the Silver Summit, it used to be in a workshop, and I was on the main stage. And you go back a few years at the Silver Summit, you were on the main stage, and I was on a workshop. So, as things progress, we've gone, back and forth. And that's a big shout out. I've said it once before, but I want to say it again. Hidden secrets of money is something you didn't have to do. I mean, you could have taken the profit for yourself or whatever. And you, being who you are, Mike, took all of that and made it available to teach everyone about the hidden secrets of money, how money really works. And that is your opus magnus as far as I'm concerned. I know your book may even top that, but I digress. But I just want to take a few minutes to publicly acknowledge you because I don't know, we both take our flack if silver's not moving the way people want it to, or on and on. I won't go any further, but thank you for all you've done for the community. It's really recognized by me and many others that don't voice it.
Well, thank you for the recognition that you've actually been doing this since the 90s. I didn't really start in it until the early 2000s. And you've been somebody that has been, you're the silver guru, basically.
Right.
You've been in this, like I said, since the 90s, and you have been the silver guy, pounding away on it since the 90s, telling people what a bargain this is. But what do you see in the markets right now?
Well, I see silver is finally starting to catch up with gold. I mean, that's provable by this extreme gold-silver ratio that's never been achieved before in history of like 125 to 1. Stayed there very briefly. Usually it's a spike, and this time it was as well. I think we've been down to the low 70s already, and that portends some really bad economic times ahead. That's what it's always forecast every time it's gotten to roughly 100 or above. And what I see is silver still got a long ways to go relative to gold. So I think we could see, 40 as a minimum, 20 to 1, perhaps, maybe even 10 to 1. But time will tell. And I think right now, Mike, the way I see the market is we need, or we'll see, a bit of a trading range for a while. And actually, as much as I wouldn't mind seeing silver just go up, up, up every day, it's actually good to consolidate. We call in the commodities market back and fill, which means it moves back and forth, 25 to 30, 30 to 25, 25 to 30. Rough numbers, people. I don't know the future. But it trades in a range. And then after it builds that base going sideways, basically, then it starts to move up again. So that's what I expect.
Okay. Yeah, do you have any... do you believe that they've gone past the point of no return, economically, the Federal Reserve and the government, and that at this point the monetary system has a likelihood of breaking someday or another? Because I'm sort of getting the feeling that, I used to want to, I was hoping that like the 2008 crash would be much deeper than it turned out to be. I really wanted things to clear and for the economy to balance itself again. And they never let that happen. They kept on pushing on it and pushing on it. And now I just get this feeling that we are past the point of no return. So the only consequences to further manipulation and for the system to go a little bit longer before it breaks is the wealth disparity that the Federal Reserve creates, the income inequality and wealth disparity, and the polarization of society. So do you have that feeling also, that there's a certain sense of foreboding out there as far as the monetary system potentially collapsing?
Well, Mike, excuse my corny sense of humor. You know me, but it's more than a feeling. Yeah, it's an absolute as far as I'm concerned. I use the analogy of the backside of the power curve. I have an aircraft background, as some of you know. You can look up backside of the power curve in Google. Basically what that means is the airplane's going to stall out, or the jet or a prop plane. And And what it means is that no matter how much power you've got left to throw to it, you are going to stall. And that's where we're at. No matter how much more money they print, Mike, it's done. It's over. It's kaput. It is finished. Now, it might not be that way for you today, but the system is done. So, yeah, I mean, if you go back just a decade or two, you used to have to print like $5. Excuse me, yeah, I didn't use the word money. I'm trying to be really good today. 5 units to get 1 unit of GDP growth. So that's a bad return on investment. If you borrow money, you want to borrow a unit and yield, 10% on that. But if you got to produce 5 units to get 1 unit of economic growth out of it, that's a bad deal. Now we're way past the point of no return. We're basically printing stuff in the trillions. And what are we getting for it? Basically, a stagnant economy is what we're getting. We're still getting massive bankruptcies. We're getting corporate bonds that are so worthless that the Federal Reserve has to come in and buy them to keep the bond market alive. The repo market that no one's talked about in quite some time since this 19er thing arose is still in arrears. There's people in the banking system at the top levels that don't trust each other for an overnight loan. So I think everything that you can point to points to the fact that they're on the backside of the power curve. They can print from now till kingdom come, and it doesn't do any good other than destroy the system, and it's being destroyed right before our eyes.
Yeah. And to me, this is just a time to own real things. Anything that's a paper contract between two parties, whether it's stocks or, and if you really need to, I'm not sure whether it's a good time to get in debt or a time to get out of debt, because if they print this into like a hyperinflation, then the bank ends up buying your house for you if you're in debt. So, however, the future is so uncertain right now. It is they've pushed this thing to where it's balanced on a knife edge, and I just don't see any potential out there other than the knife coming back to stab us. So, okay. Well, it was great having this conversation. Is there anything else you want to add here at the end, or any other topic you want to cover?
I think something I've said from the very beginning, I mean, to reiterate what you've said over and again is, if you can't hold it, you don't own it. I think that's paramount. I also think that what we probably could do on the next show or next time we're together is, the unaffordium and unobtainium. I mean, those sound like, they're stretch, but they're really not. The silver market is so small, so is the gold market, that, will be obtainable. I made the joke years ago that you go in to buy silver, someone just caught fire. It's like they awoke. And they say, oh, my goodness, I'm going to go get silver. So they run down to the nearest coin dealer in a large city. There's 3 or 4 or 5. And they walk in and say, oh, I'm going to buy some silver. And the owner of the shop says, great, I've got this slab 1927, SVDB, whatever coin for $2,000. And I've got this slab silver coin for no, I just want to buy some silver bullion. He goes, oh, you should have been here about a year ago.
Yeah. When I said paper contracts and stuff and stocks, one of the things that can be a good investment when everything else is falling apart, I think that as the metals soar, you've got a newsletter where your whole lifetime has been wrapped around studying different mining companies and different companies that are related to precious metals, especially silver. And these things can offer a lot of leverage. And one of the things that I tell my audience is that investing is a team sport. And you want somebody on your team that's knowledgeable. You want some advice, because out of the stocks, there's going to be a certain amount of winners and there's going to be a certain amount of losers. And every stock contains some risk, and you want to minimize the risk. And that's by going with somebody that has done their homework on this. So I want to tell all of my viewers that they should take a look at the Morgan Report and go to the morganreport.com, check it out. And if you're going to take some of your gambling money. I always believe, just like you've always said, Dave, your core position should be physical.
Oh, yeah.
And then take your fund money and get some leverage with it, because that leverage can have a huge payoff. So regarding the mining sector, Dave, what's happening in the mining sector?
Well, it's finally caught a bid, Mike. And what I mean by a bid is that there's money coming in the sector again. What you're seeing is a lot of money's moving into the ETFs for the, physical metal, more or less. But you're seeing, like Warren Buffett buying into Barrick Gold. That's huge news. I mean, he's the anti-gold bug, yet he buys a gold mine for the copper. Okay, Warren. And this is what you're going to see more and more. Is you already did something recently about institutional money coming in. So the top tier, cash-rich, unhedged mining companies, which we focus on for big money in the Morgan Report, have sustained good performance, and many are making new highs right now. And we're just getting into, new territory in gold on a nominal basis. You move down into the risk to reward profile, where you have greater risk but higher potential rewards. You're seeing a lot of these companies start to eat up smaller entities that have good assets in the ground. So merger and acquisitions are taking place, Mike. So the smarter, savvier, better financed companies are saying, well, I don't really want this currency. I want to buy real assets with it. So that's what's taking place in more or less the mid-tier sector. Then the junior sector, which usually comes to the party late or when things are really hot, and I still believe that will happen. But even in that sector, Mike, you're starting to see a lot of money being raised much more easily than in the past. You're seeing oversubscriptions. In other words, we're raising funds for, pick a number, $5 million, and they all of a sudden they're at 7.5, so they have to get permission in some cases to take the extra money. So it's actually getting quite exciting again. You're seeing it across the board, from top to bottom, from the juniors all the way up to the seniors into the mid-tiers. Everywhere you're seeing a lot of interest, money, enthusiasm, and participation. And I think we're just getting started, and I know I'm extra bullish and I am biased, but when you start seeing a change like this that we haven't seen in basically a dead mining cycle for a long time, it gets rather exciting, and I can't help it. I'm excited about it. And the one thing I wanted to point out is, if I'm right, and I think you're agreeing with me, that if it gets to this unobtainium level or close to it, I think there'll be a mad rush to the stocks, because it's like in the 1930s when you couldn't own gold, you went to the mining shares. And this time, if you can't get silver or gold, you're going to go, oh my goodness, I can't buy it. Look at what Buffett did. Buffett bought Barrick. Why did he buy Barrick? Because the amount of gold he really would want to buy could move the gold market, and the gold market's much bigger than the silver market. So it could be a case of, where else are you going to go? I can't get silver, at least, or even the premium is so high, I feel more comfortable buying a mining share. So we have that possibility. I'm not forecasting that, but I'm thinking about it.
Yeah, I've spoken lately about this is when the institutional money is starting to come in, and when the billionaires start coming in. This is a whole different world than the 1970s. And this time, it really will be different. I mean, we hear that all the time in finance, and it never is.
Yeah.
But this time, really, it is different. In the 70s bull market, where gold went up like 24 times its price, silver 36 times its price during that run-up, we didn't have the threat of the monetary system imploding. I mean, this is really it will be different this time. We didn't have all of these billionaires. So anyway, it's going to be something to look forward to, but at the same time, I find some aspects of it, especially the rise of socialism, frightening.
Yeah, I wasn't going to say anything more. I'm sorry, I can't help myself, Mike, but I agree. I mean, that's the most important thing. I did a video years ago, Myths in the Silver Market, and I talked about not everyone can own a little. And then after that, I said, if you come out of the other side with a great deal of gold and silver and this amount of wealth, but you've lost your ability to say what you want to say, go where you want to go, buy what you want to buy, do what you want to do. In other words, if you lost your freedom, then really what have you gained? And I still adhere to that, because having a big pile of purchasing power doesn't mean much if there's so much force on your personage or your ability to think, do, and say whatever you really want to do. So that worries me a great deal. And of course, the polite word for a totalitarian situation is socialism, but the idea that somebody knows more than you and controls your whole life is repugnant to me.
Absolutely agreed. I want to thank you for your time. And so say goodbye to the audience.
Long audience.
We'll see you next time. Thanks for watching.